G'day there. Welcome to the closing bell on the 5th of April for me on the Friday around the midday. And today I'm going to have a look at oil prices. Obviously, they're starting to take off, a bit of geopolitical risk around with the intractable problems in the Middle East and just the technical situation heating up for oil prices. So I thought I'd just give you a sense of where they could head if they take off a bit further from here, how that could feed into the inflation risk, I guess, which could hurt bonds a bit, and stocks could then suffer a bit of a correction too. So it is a bit of an interesting situation. So I thought I'd just give you the really big picture on oil prices and show you what I think could be coming next. So just looking at the Brent crude price here, and just the quick analysis of this. Here's the rally from 1999 into 2007. And, I really see all of the trading since as in relation to that huge rally. So I'm looking at the point of control of that range, which comes in around $78. That's the midpoint of this huge range here. And the buy and sell zones of that range down here. So we've got the 75 to 87% retracement. And then on the top side, the 25% and 12.5. And basically, what I'm saying there is that once that big range is set up and prices react, you often get a lot of work done of prices sort of oscillating around that point of control, around that midpoint. And prices often will reverse within that buy zone area. So you can see over and over again where the resistance is coming in is in that sell zone area, and the support coming in down around that buy zone area as well. And once you get the reaction, the reversal, you can see prices sort of gravitating back to that midpoint. So you can sort of analyze all of this as these waves going down into the buy zone, back to the point of control, down into the buy zone again, back to the point of control, and up into the sell zone, back to the point of control, which is what we've just seen over this past little period, this past year or so. I've been waiting to see, do prices crack through that point of control and rotate all the way down to the buy zone, or do they hold at this point of control and turn back up? Similar to what we saw here, where it's rallied, the point of control has held the move, and then it's rolled over again. So in reverse, it's a similar situation of we've had the immense rally up into that sell zone. It's been hit back to major support, and at the moment that's holding it. So there's a chance that we're going to actually see a rotation back up into that sell zone area. So when you look at that then up close, you can see, if we then just get rid of that one, and let's just actually look at the most recent wave to the upside. And just looking at that, a similar thing, sort of back to that midpoint. Obviously, that larger wave is sort of a function of the bigger one. And you can see that it's switched over into long-term downtrend there after this sort of huge rally. And that was a one-way rally. So it's a very strong rally that happened a few years ago. No wonder it had this correction. And, it did flip down to long-term downtrend. And I've just sort of been watching and waiting, a bit wary of oil. I haven't been talking about it too much. And really sort of my lines in the sand, back under that $70 region was going to be dangerous for a move back to that buy zone area. and it's managed to hold in there. And you can see, it's sort of been stuck in a range, I guess, for this last year or two. And this is where I've just sort of let it, do its thing without having any really strong views on it while it's just stuck in this range. And it's just interesting to note that it's just recently, the last few months, you can see on the monthly, it actually created a little monthly buy pivot there a couple of months ago. And then you've got another strong bar last month. And you can see the long-term trend sort of shifting there. So it is getting strong enough to shift that long-term trend. And so from here, if it does head above that previous high from 2024, to 2023, sorry, which is $96, let's call it. So Brent crude above 96 with the long-term trend shifting and the fact that it's held the point of control after a very strong rally. I mean, you're really expecting it to rally up into this zone. There wouldn't be much resistance. So you'd be expecting that oil prices could actually run pretty hard and with a good trend if it can head up through that $95, $96 region. So currently at 91. So, it might take some time, might need to do a bit more work before it can do that. But also the situation is sort of there where it could keep trending here. And a break above there, I'd really expect it to get up to that range there. And that is, what, 107 to 123. So with oil prices up at that level, that is going to start feeding into worries about inflation picking back up. And who knows what is the geopolitical situation? Is it getting worse, I guess? But just sort of pointing out that after a few years of sort of going nowhere, it's starting to shape up that oil prices could be ready for a run. And very big picture that oil prices have held above that major midpoint, which I was talking to you about, which has been in place for a few decades. So the fact that it's holding that level and then starting to trend higher again really sort of adds to that feeling that it can surprise to the upside in the short term. So you've always got lines in the sand. You're never saying what's coming next. All you're doing is saying, well, I'm actually willing to say this is a pretty good chance of doing this. And, if the music stops, monthly sell pivot heading back below the 20-month moving average would sort of start to snuff that view out. So that's, the low 80s there. If things collapse quickly and it heads back below, let's say $80, it's just going to be a very different looking chart. It's going to look like it's still stuck in the range and, still at risk of heading under 70, which would really be a bloodbath for oil prices. So that's really the view, saying that I'm now sort of pretty bullish on oil prices and, pretty tight sort of view, really, saying that this should rally and could rally strongly above 96 and, back under $80. And I'd sort of switch off that really strongly sort of bullish view. So that's sort of how I'm looking at it. So how could that feed into the bonds? Let's have a look at those. So this is a US 10-year bond yield and very long term. We're looking at those long-term trends. And just the first thing to note, long-term trend in yields is still up. I think we're probably, in a stage where it will eventually turn down sooner than later. But we could be in a period look similar to what we've seen back here, where you're thinking it's about to turn down, and then it spends another year stuffing around before the trend actually shifts and yields start to fall. So, it hasn't actually confirmed yet that, that long-term trend is down. So there is that risk that yields could start gravitating higher again. And you may remember just recently I was saying, above 4.4%, I was getting a bit concerned. So this is the weekly chart of those US 10-year bond yields. You'll see from, above 5%, we had that very strong move down in yields to about 3.8% into the start of 2024. And I was just looking at, that wave and saying a while ago, look, above the point of control, which is around 4.4%, is looking like it could, keep moving higher, those yields, back to sort of 4.7 to 4.9. And if that happens, that stocks would start to come under pressure. So this week, we actually did see yields sort of spike up to that area, the 4.4 region, and stocks starting to see some selling pressure, but they've backed off a little bit. So, but the fact is, it's just sort of on the edge. Another wave higher in those yields, and you really could see quite a spike up into that area, and I think stocks would get a bit concerned. And if oil prices are catapulting higher at a rate of knots, that's not going to help matters much, is it? So we've got a bit of a line in the sand there. You see that it's provided resistance. We'll see what happens from here, I guess. If it then has retested that resistance at 4.4 and all of a sudden the buying comes back into those bonds, pretty quickly, it can look pretty bullish again on those bonds. So, jury's out a little bit. This is very short-term stuff, just giving you something that you can keep your eye on those bonds. If they sort of start catapulting above 4.4% yield, I think stocks will probably be in correction mode. And look, it's been a hell of a rally. You've always got to be wary after a big, strong rally, and it's just going up and up and up. A correction is always pretty close by. So let's just have a look at the S&P. And we're seeing a little bit of weakness with those oil prices taking off and the fears of what's happening in Israel, Iran going to respond to Israel's attack on their commander recently. So, that can feed into a bit more weakness. And I just wanted to point out, the resistance zones sort of up here for the S&P 500, because it has broken out. It's been an incredible run that we've seen over the last few months, breaking out to new all-time highs. So, you'd think, gee, there's no resistance, but really there is. And the way I look at this is I sort of look at these extensions, Fibonacci, I guess, extensions from the waves. I'm sort of looking at this wave from 2020 up into 22, massive wave higher, and then we saw a correction, which went pretty much bang on to the point of control, that midpoint. So that sort of adds a bit of credence to the wave that I'm looking at. And so now we've broken out to new all-time highs. And my first major resistance level based on that huge wave is sort of 25% above it. So that's up around 54.60, which is not much higher than where we've gotten to just recently. So there's that as a potential resistance zone. But also shorter term, I'll also look at this wave down. So I can look at this little down wave here and, consider again the reaction up and the two key areas for me, 25% above, and also that 618, which is the Fibonacci level, 61.8% above this wave. So that just gives me two areas where I can say, look, there's just a heightened risk that some sort of correction is going to take place within this area. So that just means, whatever that correction could be, it might just be a retest of that old all-time high and then, take off to the upside. But also, be aware that it could also be the beginning of a major failure, sort of a false break of that high, sucking everyone in, getting them bullish, and then, turning into a bigger correction down the track. So that's really all we've got to hang our hat on at the moment is those areas as a potential spot where we could see a correction from. But the momentum is, up. You're allowing this upside momentum to take place. Looking at this weekly, it's still a long way from the weekly trend turning down, isn't it? That may not happen for months. And, so we can still see lots of work done, let's say a few months of stuffing around, and that weekly trend could stay positive, and then the market could keep rallying. So really early days, I'm not calling a correction now at all. I need to see the price action play it out. All I'm saying is just be aware that usually up around this area would be a spot where you could expect to see some sort of reaction that's going to shake out the people that are just sort of blindly buying, thinking, gee, this market's bullish, let's get on. Usually they'll get shaken off in some form. Yeah, just interesting dynamics. We're really bullish, letting things run, keeping an eye on oil prices now because I think they could start to take off. And then does that feed into a bit of weakness in US bonds? And does that cause stocks to at least sort of tread water for a while? I guess that would be the main point of the day. All right, that's enough. I'll come back with more next week. Cheers.